Interestingly enough, you kind of got to a little bit of a double bottom here. This maybe is a little bit of a W beginning pattern. So we would want to see gold start to track back to like 1900 and then maybe create that V for the next big move up.
Coin.
Yeah, and honestly, that's the smart move. So for me, I picked up a little bit as just short-term swing trades. The only ones for long-term investments I would go near, for me at least, is Ethereum and Bitcoin. And the thought process is just what you said, is that we don't know what's going to replace which technology, which one, So like if you looked at 2 years ago, if you looked at the top 20 cryptos, a lot of those are no longer in the top 20 and they've fallen down. And now you have like Solana, Avalanche, which weren't in the top 20 a couple years ago. So people have to be really careful. I mean, it's okay to take a long shot with a very small amount of money and just roll the dice. But if you're really trying to be an investor, you need to stick with the best of breed in crypto, because I think before the bear market is over, a lot more projects will go bust than what we've seen, even with the Terra Luna and even with Celsius and all these other things. I think a lot more will happen negatively first. Into an election announcing a recession. No, and you're definitely right. I mean, there's no doubt about it that the Biden administration needed some wins. The popularity showed exactly, he wasn't popular or he isn't popular, and you got to have some wins up on the board going into the midterms. And so I think that's part of it. I do think, the charts were telling us oil was going to roll over. The peak was when Russia invaded, because that was max fear. We didn't know how things were going to behave, how the supply of energy was going to be. Now we clearly see that Russia's still selling its oil. It's just selling it cheaply to China and India and some of these other countries. So I mean, there's really no major reduction in oil. In fact, OPEC, I think, is meeting to possibly talk about cutting output to try to boost price back up. I don't think it'll matter. And the reason I don't think it'll matter is because the global economy is slowing due to central banks hiking rates. And so, you could cut 1 million barrels of oil in production, but if the economy on a global basis starts to use 5 million less, supply demand takes case here, and you're going to see oil come back in. So I still have downside to at least $76 a barrel. And I think that could even be seen going into the midterms, but if not, by end of year. Yeah, you can't. I mean, you probably, if you did like chemical tests, I think they can tell like where it came from, but no one's doing that. At this point, when oil's as high as it is, even at $88 a barrel where it is today, people are going to be more than willing to say, oh, that's oil. Sure. If you're going to sell it to me for 75, I'll buy it today. No questions asked, So it's a wacky time out there. And then you have, potential risks of Taiwan and China. I'm in the belief that China won't do anything, at least in the near term, with Taiwan, because their economy is really struggling. And they know that any sort of invasion would throw the world into a deep recession. So my guess is nothing happens there, at least over the next few years, but it doesn't mean nothing won't happen in the next 5 or 10 years. So, I mean, there's going to be these overlying risks out there, and we'll have to kind of take it one step at a time. Yeah, so with GBTC, it definitely, like you said, it's trading at a discount. The only question is why, right? And what's the kicker here? And you can see, here's your chart, there's your beautiful M top, and it's kind of been tracking Bitcoin just at a discount. And the only thing you want to do before you invest, this is an ETN versus an ETF. And I think the difference, and again, people should confirm this on their own, but an ETN doesn't have to hold the underlying asset that it's tracking, versus an ETF must, right? So a gold ETF has to actually buy gold to back the ETF, while an ETN, I don't think, has to actually own any Bitcoin. It can just track Bitcoin's price. And again, obviously people should do their own due diligence, but that could be why it's trading at a discount, because people now also are now starting to open up more and more broker accounts to trade spot. And that's what I like to do. I mean, if I'm going to buy Bitcoin, I'm just going to go right to the source, because you cut out the middleman that way, and you kind of create a scenario where hopefully you're buying the pure thing. There's no fees. I think GBTC does charge a small fee as well on a yearly basis for owning it. So yeah, it's interesting. I think that once Bitcoin bottoms, there's going to be some good stock opportunities. Marathon Digital is one that is worth keeping an eye on. I wouldn't go into it until Bitcoin really looks like it bottoms out, but this one, certainly being a miner, That's going to be very, very interesting down the road. And then I think you have to look at companies that are now getting into the NFTs and the metaverse and all those type of things. That is the future. It takes a while to come. I think everyone wants instant gratification. Like, oh, why isn't, Meta already rocking it in the metasphere, right? Or the metaverse, but it just does take years, right? Things take time to pan out, to build out. And I do think that is the future though.
The gold equities.
Yeah, so I continue to be a huge fan of gold, not only because I think gold does have upside to it, and I think the kicker may have started today with the potential of the economic jobs report to signal that the end of rate hikes is at least on the horizon, right? The Fed is still going to raise in September, May 50, 75 basis points. They'll probably raise one more time later this year as well. But I think that the markets after the jobs report was just a little weaker. I think they're saying, oh my goodness, maybe the Fed will be done after that. And that's very, very bullish for gold because it's bearish for the dollar, right? The US dollar has been going up because the Fed keeps tightening monetary supply, pulling dollars out of the market. So the bounce in gold today has been tremendous. In fact, let's take a look here. Interestingly enough, you kind of got to a little bit of a double bottom here. This maybe is a little bit of a W beginning pattern. So we would want to see gold start to track back to like 1900 and then maybe create that V for the next big move up. But I think that, again, with the uncertainty about the economy, with the uncertainty about the Fed, all these things make stocks very, very risky right now. Crypto, very, very risky. We don't even know with regulation, and we didn't touch on that, but regulation at some point is going to come for crypto. And therefore, gold, even if it doesn't outperform and make you 20% in a year, at least you're not going to lose 20% like if you were in the S&P 500 or way more if you were in cryptocurrency. So Newmont Mining, I mean, holy cow, look at this chart on Newmont. I mean, this is by far my favorite. Look at how oversold that is. You had this channel line here, a beautiful channel. You pierced it, and then you touched these pivots right here yesterday. And then look at the bounce today. That stock's up almost 4% on the day. So an awesome move there. And I think, again, as soon as you see an end to the hiking, then the miners, the idea is, all right, so one of the reasons why the miners have underperformed gold. So if you look at like Newmont Mining, I mean, holy cow, down what, 50%? So the miners are underperforming gold, which is maybe down 5% for the year because they have these inflation costs that are going up, right? So when they mine, they have to pay their guys more. They have their equipment costs more. All of these costs go up for the miners while gold's price hasn't really been going up to compensate them. So they're getting crushed on costs, meaning they're making less and less money. But if you see inflation stall out and then gold start to go up, now the miners should outperform gold on the upside if that occurs. So I love right now. It's I got gold miners, I got GDX, I got GLD. I'm in gold pretty heavily down here, and I'm only partially, right. So I swing trade gold a lot, but I'm a big believer in the security of having a little physical gold. Like I always say to people, like, you'll sleep better at night knowing if you wake up the next morning and the banks are shut down, the grid is down. Like, you might not even be able to access your Bitcoin if the grid is down, let alone your credit cards aren't going to work, and who knows what's going on if you can get to the bank and get any cash. But if you got gold for thousands and thousands of years, gold has been a store of value and a store of buying things with. So have a little bit on hand. Doesn't have to be a lot, but just the emergency amount. Yeah. No, 8 ounces is perfect, right? Because you think about it, if the grid went down, it probably wouldn't be for a long period of time. In addition, if the grid went down, your gold would skyrocket in price, right? Because it's the only form of value. Everyone would be like, yo, I'll give you 10,000 for an ounce, because they can't buy anything else potentially, right? So I think you're fine there. As your wealth grows, maybe add a little bit in proportion, but for me, really, it's like, right now I hold physical maybe like 1% to 2% of my net worth. Very small amount, but it's enough that I think I can take care of my family in the event of emergency. I do have silver. I don't have any platinum right now, physical, but I do have silver. Silver, the nice thing about silver is that it's cheaper per ounce, right? So like I was trying to think about it, like, all right, if you have to go buy a loaf of bread with gold, how do you do that transaction? Like, do you get like a little file and file off like a tiny little bit of gold, But with silver, at least you could get an ounce of silver and let's say it's $20, like maybe so half an ounce is 10. I mean, at least it's in denominations that you can actually buy food with in theory. Yeah, correct. So I think you might get a little bit of a bounce here early September. We're around this 3-day holiday weekend. Markets are starting to think maybe the Fed is coming to an end of their hiking cycle. I think by late September, October, that might be the case, but then I think we're going to start to see weaker economic data that's going to freak the markets out about maybe the Fed already pushed us into a recession and it could be a bad one. And then the biggest question, which could really be detrimental to the stock market, is how does the Fed get us out of the next recession? Every past recession, they've printed us out. If inflation is still even at 4 to 5%, and we know it's way higher right now, how do they print money with 4 to 5? I mean, what are they going to send it to 15, 20% inflation by doing that? They're not going to do that. And so you could be in this prolonged recession that just really stinks, frankly. So it's going to be a trader's market. Great to get educated, learn how to read charts. It's super helpful in guiding to like entries and exits.